Hi, I'm Patu from FreeFinCal. Let's take a look at Quant Active Fund in this video. One of the biggest mistakes that DIY investors do is that they look at funds and they look at the last 1 year return, last 6 month returns, and they don't do any further research and they get excited about it and say, I want to invest in this. Now, one of the most enjoyable aspects of mutual fund research is to study the past history of a fund. What was it before when the fund was before the current AMC had the fund? What was the previous investment strategy and so on? That kind of basic research is necessary. It will take about 15-20 minutes of research to do it. You're going to put your money in. I think your money deserves a lot more respect than just looking at the last 1 year returns and investing. Alright, so let's take a look at this. So obviously the only reason why people are interested in it is because of the 96.1% returns in the last 1 year. Of course, a little when they must have looked at it a few months before, it probably looked a little more rosier than this. Now, so if you look at the Quant fund fact sheet, you would see that the date of inception would be April 2001, or you can look at Value Research or some place like that. Then you would automatically know that somebody else must have had this fund before, because Quant is a relatively new name in the fund space. Now, Quant Capital acquired Escorts Mutual Fund in late 2017, and officially in early 2018, all the funds became Quant funds. So, Escort Growth Fund is the original, that's how it was, the fund was created. Then it became Quant Growth Fund. Then it became Quant Active Fund. Quant Active Fund, Growth Fund was a fully invested fund. It could invest 80 to 100% in equity. And Quant Active Fund was a multi-cap fund which can invest freely across market cap, benchmark to the Nifty 500. Then the SEBI, the unnecessary rule for the multi-cap funds came on, and they said multi-cap means 25% large cap, 25% mid cap, 25% small cap. So all the mutual funds were forced to change category, and they protested, and SEBI introduced a new category called flexi cap. Now, so on 1st January 2021, to conform with these rules, this fund became a multi-cap fund and was now benchmarked to the new index called Nifty 500 multi-cap 50 25 25 index. I have reviewed this before. There's a video on this and so on. So it can now invest in 25 to 50% in large cap, 25 to 50% in mid cap, and 25 to 50% in small cap, and about 35% in bonds and so on. Now, so this is the last 1 year performance, or rather this is the performance since start of 2019, January 2019, and you can see people are excited about this uplift here. Now, but if you actually look at the asset allocation history, you don't need to draw fancy graphs like this. You can just look at the past fact sheets to understand, or you can maybe some of the fact sheets may not be able to offer this. This is a problem. Some mutual funds, I think Axis has got a habit of showing the fact sheet data. I think Morningstar also gives you some kind of historical asset allocation. You can look at there, or you must have some way to keep track of the history. I do this via a paid tool called ASMF. Many people will not be able to do this, but you can see here that the fund has increased small cap exposure, the gray regions, after the crash, and then that because of that recovery, the fund was able to get those nice returns because the small caps also recovered. Of course, not just small caps. Not just blindly small caps. It was also active small picking. Stock pickings. Excuse me. We must give that much credit to the fund manager. But the point is that the fund history is very short. You can't look at the returns 5 years ago, 10 years ago, and so on. You can't do rolling returns without actually studying the fund history. This is very important. Now, if you look at the asset allocation history of Quant, a couple of times it has taken a little bit of cash calls. That is, it has invested about 20% in bonds, but other than that, it has generally stayed fully invested into equity. Now, what is more interesting is the AUM. If you look at the expense ratio of the direct plan was extraordinarily high up to June 2020. In July 2020, they crashed it down to about 0.556 or 0.6% or so, and it has remained there as an invitation for AUM. And you can also, they must have motivated the distributor community, regenerated their marketing efforts and so on. So as of January to March 2021 quarter, if you look at AMFI, 41% of the funds AUM is in the direct plan. This is a shift from 24% in April-June 2020. April-June 2020, before the expense ratio was decreased, the direct plan share was only 24%. Of course, the AUM itself was something like 11 crores or something like that. Today, the AUM is 500 some odd crores or so. So there's a big shift in just the last few months. So the regular plan between those two quarters, from April-June 2020 to January-March 2021, the regular plan AUM increased by 16 times, the direct plan AUM increased by 35.5 times. So there's a huge increase, and people have got attracted because of the expense ratio and these returns. I mean, I call this immature AUM. It's just people with basically, young guys who just don't do any kind of research, look at use their mobile phones, look at their apps, all these robo advisory templates, whatever offers them analysis, and they just commit money to these kind of funds without any kind of history. I mean, it makes no sense at all. You can see this from here. This green line is the spike in the AUM in the last few months. The blue line is the NAV, and the red line is the absolute change in the AUM minus the absolute change in the NAV. Now that red line was hovering around 0%, up and down, fluctuating up and down. Many times it has dipped, which means that AUM actually had decreased. The inflow has, I should say outflow has increased, redemptions increased. But then look at that spike there, huge spike of 120% in after that change in expense ratio, and then it has been on the way up. So it's a very, it's a young fund, no history. Many people are just blindly investing in it without any kind of proper research. I mean, it's just baffling how they do it. It's crazy. Please don't do this. Please stay away from such funds. Such funds have to prove themselves consistently over at least a few years before you can show some interest. Before that, you can't wait. No, you have to start investing, right? So please avoid such funds and don't get carried away by last 1 year returns. I will also have a look at where you can look at past market cap history. Bye bye.